Obviously, one of the key sectors in this region is the offshore sector. We're now having a discussion. It's entitled Consolidation and Growth in the Offshore Sector. Our moderator is Fazelbhoy, Chief Executive Officer of Synergy Offshore. And on the panel, we have Alok Kumar, Chairman of Alphard Group. We have, is Sanaz here? No, Sanaz not here, yeah. Friedrich Portner, Chief Commercial Officer, Maritime Cluster of the Abu Dhabi Ports Group. Giannakis, yep. Managing Partner, Maritime and Offshore Investment Banking with Alantra. And Mark Kachouh, who's Managing Director of Middle East of All Energy Services. With that, I'll hand over to Fazel, please.
Thank you, Kevin. Thank you, Mia. Thank you, Marine Money. It's a pleasure to be back again, and good to see a lot of familiar and old faces. So every year brings about a new theme, followed by a couple of buzzwords in the offshore support sector. For several years, from 2015 onwards, the themes were capital discipline, cutbacks, low day rates, low utilization. For the next couple of years, from 2017 to 2019, they were cold and warm stacking, layups, survival, just about treading water. Just as hope was reviving towards the end of 2019, the theme shifted to COVID, pandemic, lockdown, and the plight of the desperate seafarers. But from 22 onwards, there's been a palpable change. The initiative swung from charterers to owners, and there was a renewed sense of optimism, and both utilization and day rates moved towards new heights and towards the next supercycle. The current theme for this supercycle and the buzzwords seem to be consolidation and growth. Traditional deal flow has moved more towards the M&A sector as a flurry of acquisitions and mergers have swept the region. The region followed an international trend sent early by Tidewater with its series of accumulations of companies and fleets. Closer to home, we have seen DP World acquire Topaz Energy and Marine, rebranded to P&O. Shua acquired Stanford Marine, the merger of Stanford and Alliance, the takeover of Zakir by ADNOC LNS, and the purchase of the ENAV fleet by the Maritime Cluster of Abu Dhabi Ports. Then there's the rumor mill and the market chatter about potential acquisitions of the combined Stanford Alliance fleet by NMDC, the aggressive moves being made by ADNOC LNS as they appear to want to take over a large dominant role in the offshore support market. There are talks about acquisitions of a Singaporean company that is active in the region, a very large offshore and logistics company, and even a shipyard to attend to the new vessel requirements as well as repairs and future new builds. Now, whether all these deals go through or not, the time is certainly ripe for this kind of consolidation in the market. One of the results of these consolidations is clearly less fragmentation and in some ways less competition between the heavyweights. These heavyweights that own fleets of 75 to 100 plus vessels have now been merged into 200 plus fleets, and the largest of the independents now only have a fleet size of about 30 to 35 vessels, making them themselves an acquisition target. Now, to discuss this consolidation and growth in the market, we have put together a formidable panel of experts who have already been introduced. So I'd like to take it from there and jump into the questions. Right, so I'd like to start with asking one question to all the panelists to kick it off. Basically, currently demand is outstripping supply for the OSVs. How long do you think this trend will continue? Let's start with Friedrich.
Yes. First of all, Fazel, thank you very much for inviting me here to this panel, and I'm very glad to be here. Now, coming to your question, I think that's the big debate, right? But if we look at, and I'm maybe one of the more optimists, if I go even during down a few years back, when we had the downturn, I was looking at the supply and I was looking at the potential demand. And I was always saying there is a scissor effect happening. And it came later because of the COVID. However, if we still look, nothing is being built. Nothing has been built for the last 7, 8 years. Nothing will be built probably in the near future, at least my estimation, at least in sizable numbers. And the demand is there now from wind or from oil and gas, which is today important again. So I do believe that we're there at least for a few years. I cannot foresee, but probably 5, 7, 9, I don't know.
Sounds better and better. Keep going. Captain Alok.
I think 3 to 5 years definitely is going to be like this. Reason, same, no new building, neither it was built, nothing is in order. And again, nobody is going to speculate and build a new vessel because nobody is giving you 10-year contract. To make a break even for a PSV or anchor handler, you need 10, 12 years. At the current charter rate also, 10, 12 years to do the break even. And even interest rate is higher. So definitely 3 to 5 years going to be like this.
George, from a financing standpoint.
Yeah, mixed view, I guess. I think we need to decouple a little bit the offshore market. The offshore market is still a global market, but it's also fairly regional. So I think the view in terms of the Middle East, let's say, is definitely a much longer term view in terms of the demand being consistent there. The rhetoric of the NOCs is very clear in terms of what they're looking to do and how much money they're investing in the sector. And the supply dynamic is the same globally, right? So it's a scarce commodity to own an offshore vessel today. I would actually so in terms of the Middle East, I think the view is definitely a medium-term one. I think in shipping in any sector, if you speak more than 3-4 years, it's a very difficult call after that. In the other global offshore markets, because it's mainly driven more by private investment rather than government investment, the market will be quicker to respond to a downturn compared to the Middle East. That's why Middle East always outperformed the rest of the offshore markets in a bad market, and obviously strongly performs currently as well.
Mark.
Yeah, thank you. Thank you so much, Marimani and Fazel, for inviting us for the gents who doesn't know All Energies. We are one of the largest charterers of offshore support vessels globally, with around anytime around 40 to 60 OSVs under charter. Between Africa, Middle East, and Indian subcontinent, and I share the same view. We're lucky enough to be in the Middle East. The market has been very, very active. We have various drilling campaigns and projects that are ongoing. The demand is really great. The supply, as everybody knows, is very, very limited. So we definitely foresee around 2 to 3 years continuation of the current market, but not in the same trajectory how we have felt for the last 1 or 2 years. It is more or less a stable, mature kind of a trajectory for the foreseeable 2 to 3 years. Yeah.
So to summarize, I think we're coming off a low base. We've seen very high growth. We're seeing tapering growth, but we're seeing growth at least for the next 3 to 5 years seems to be the consensus. Okay, so given what I discussed a little earlier in my introductory speech about the consolidations and, Abu Dhabi ports, ENAV, and, all the other things happening with ADNOC, do you see this consolidation trend continuing, Friedrich?
Yes, I think there is a sort of consolidation happening, but I don't think that the driver is necessarily the idea of consolidation. What I mean with it is, who's buying today are companies which have the money and which have basically the projects. And who's selling are the ones which have for a long time suffered and today are able to cash out. There is a rebalancing, in my view, happening. And yes, the companies like Abu Dhabi Port, which has the money, is interested to enter into that market and will continue buying. But is that necessarily because we want to consolidate the whole market? No, I think it's a rebalancing until the market has balanced. If we look overall, the fragmentation of the market is much more fragmented than any other industry. So there is a bit of consolidation happening, but not really. We're not going to go to 3 players dominating 50% of the market.
Isn't that already happening?
Where? On a global scale? Or
here. We've got 300 or 400 vessels being owned by 2 or 3 companies. So that's becoming a fair share of the domination of the market. George, what's your perspective? You're part of the consolidation move.
We had the privilege to be involved in some of the transactions that you mentioned before. Yeah, I mean, I echo what Fred is saying, that there is definitely the move of smaller players to, I wouldn't necessarily say cash out with a negative meaning of it, right? But more, to understanding that big companies become too big by, controlling a big part of the fleet. I mean, it is a 1,200, 1,300 vessel market here, right? So if 3 companies own 30, 40, 300, 400 vessels, it's easy to do the math in terms of what is the percentage. But I don't think the small owner market will be extinguished, right? There is still going to be, plenty of space. But I think this is a good thing for the market, right? It will make it more stable. The fact that the main driver of consolidation is more driven by vertical integration to some extent, right? Either NOCs and their wider ecosystem buying, not only in UAE but in other areas of the GCC. So that is healthy. It's a way to try to control the real cost of oil extraction out of an offshore field, right? Because this has been the challenge, right? You participate in a tender as an EPC contractor, and you give prices with a 2 years forward-looking view of winning a project and starting a project, and you don't know what the price is, right? So that will make the market a little bit more stable, and it will also drive more international capital to be invested in the sector, which has been lacking, right? I know it's a question later on, which you will have, but this is a way to make the market more efficient.
Okay. Mark, any comments?
Oh, yeah, for sure. I mean, the Middle East market has been, as Friedrich rightly said, very fragmented. I mean, we have around 40, 50 OSV owners with a handful size fleet. They have been around for successfully, even through the downturn. So it is difficult to consolidate, absolutely difficult to consolidate. Yes, and some national, oil companies have picked up a lot of sister companies have picked up a lot of assets, but there is still opportunities. I mean, it is difficult for these entities to kind of branch out with current setups. It needs to be more private, more flexible in terms of movements in the market. It's a very active market. So in terms of size, yes, there have been few consolidations recently, but still it's a fragmented market, and there is pretty good opportunities, to stay in it.
So if you look at it, from all the consolidations that we've discussed, all of them seem to be regional. And the source of capital is regional, the targets are regional, and it's all been sort of a homegrown consolidation. So where are the international players? Why are they not interested? Alok, what's your perspective?
Market has moved up, but the people have burned their fingers last few years. That's why they are not coming up for this. Till the time that confidence is rebuilt, I don't think international players are coming up for this. Even for the financing, you see, initially few alternative lender came in, then some other banks are coming. Big banks are still not coming into offshore. So international player will come maybe by 2025 or something, when they see that market is stable.
That's halfway through the boom.
Yeah.
Then we should get out of it then.
George, from again, a lending perspective, where do you see the international players in all of this, and why are they not interested? For the same dynamics that the local players are buying, stable oil companies, large national oil companies, predetermined campaigns. So where's the tidewaters of the world?
Yeah. So I think, I mean, we've been, I think pioneers inside sort of bringing international capital in, in the sector, especially on the debt side, obviously with the support of our close investor base. But I think the market has gone a long way, right? I mean, our first debt financing transaction with international lenders in the space was back in 2018, 19. And obviously this has grown significantly in numbers. The entire structure of how the market works has improved. You see real firm contracts being put in place without convenience clauses. This is a big change in the market that will move a lot of international capital to look in the sector. There is companies have now understood the merits of structuring their corporate structure in a more international manner, right, that is more investable for investors. That's another big move that has been going on. So that's what international lenders need. And yes, you start with alternative lenders, then you move to banks. There is currently, we have started seeing, I wouldn't say very significant, but not insignificant either, demand from international, even banking lenders to look at offshore projects in the region, especially when it's supported by good employment visibility and strong corporates at the same time, because the fleet is interesting. Yeah.
So are you saying that there is room for international lenders to come to the region, but not so much room for international operators to be acquiring here?
I thought your question was for international capital.
No, it's open. I mean, I was
no, of course.
People like Tidewater and other people who've been doing international acquisitions.
I mean, Tidewater is present in the sector.
Yes,
right?
But are doing any acquisitions here? Is there room for international operators to be stepping into the Middle East?
You need to take
Singapore.
You need to take a small step back and see, what's the situation of each player. If you take Tidewater as your example, they had their hands full in integrating another M&A that they took over in another part of the world. So I think generalizing and saying international operators are not open or are open, it's also idiosyncratic. There are not 50 international operators with the ability or the capital to invest in the sector, and the scarcity of capital for the offshore space is not only an idiosyncrasy of the region, but is a global phenomenon, right? It's not that US banks lend to the offshore space billions or in Northern Sea either, right? So in order for equity-related investments to take place, you need also debt capital and stronger balance it. And global offshore is fixing itself globally, not just in the region, slowly.
Fazel, I can jump in if to assist. I mean, if you look at Tidewater, let's say they have 45 units in the region, and they have just did $2 million profit in a quarter, which if you look at their numbers, right? In Africa 10, in Americas I think 14 or whatever. So what you get in the Middle East is utilization. You do get that very nice. Stable market, good for finance, of course, because you have a stable market. Even in the downturn, you still have utilization. The rates might, come down, by 20-30%, but you still have that good market. So, and again, which international players mostly are here already? You have Bourbon, you have Tidewater, and even most of them, I don't think they have the capability to enter, financially. They are still some owned by banks and whatnot. So it's difficult for these international players to come in. To come in the Middle East, it must make sense geographically, and it must make sense in the G&A side of things, right? So I mean, it's very limited. It's few. If you remember, Seabulk was bought from Secor a long time back. So that is one of the international entry to the market, but it's more regional consolidation, I think.
So a lot of our discussion has been based on the sort of dynamics of the Middle East, where we talk about stable contracts, NOCs, making investments, giving demand well in advance. And yet, Saudi Arabia has cut back from its 12 million barrels per day production and has committed growth to 13 million. Now, Aramco is known to be saying that they want to double their fleet in terms of deployed fleet from 300 vessels to 450. So let's say, starting with you, Mark, you experienced in working in Saudi Arabia. What does this million demand absence mean to the market for the next 3 to 5 years?
Well, but that's a very good question, and I think everybody has been, thinking about that for the last 2-3 weeks. Well, we can find out next week when Aramco releases their quarterly or annual report. But so far, just to give a brief, because we have talked to all the drilling contractors, we have talked to the end client, we have talked to all the EPC contractors working there. So what we have found out, and I hope I'm right, but of course there is room for a mistake here. But what we have found out is from the drilling side, most of the drilling rigs are more or less contracted till 2026, 2027. So from that side, it seems the demand could stay as it is in terms of drilling. What Aramco have done previously is in the downturn they did suspend, if you remember, rigs. They did not terminate. So from the drilling side, it seems as well. I would like to note that the recent contracts, in drilling aspects, they have been without termination of convenience. So that is essential. So okay, maybe all their contracts could be suspended. But from what we know so far, is drilling side is continuing. From the EPC side and the effect of suspending or postponing the two major projects, basically, which is around $20 billion, which is the Safaniya, the world's largest offshore field, and Manifa. So those two projects have been suspended. So that knocks off around $5 billion from the capex, all right, for the annual capex, more or less. But what we have discussed and find out that the brownfield, which is the existing infrastructure projects, are still ongoing. So there's only that two projects, which of course can bring in around 100 assets, right, 100 OSVs, and that would have started anyway 2025, 2026. So yes, there might be an effect. I would say in 2026, 2027, there might be a drop in terms of EPC. But you never know, and for now, what we know so far, it is not, it's just shelving or postponing of the project. It's not canceling totally. So yeah.
Friedrich, do you have a view on the change in plans, and what does that do to your planning?
For our immediate planning, there's no change, and I remain bullish. Aramco has always been good as well at sending messages to the market. Don't overheat. We're here to support, depending where it is, up and down. This is, I guess, a very strong signal. Don't overheat. That's number one. The other topic that actually the question we cannot answer is if these projects would have come, would there have been enough vessels in the market to deliver? Hence, it's a question of, are we just putting something out which we cannot deliver? And we're debating today, we would have put 100 vessels, but there's no 100 vessel. So this is the effect which today I don't know. Our analysis is saying probably globally there wouldn't have been enough vessel in the market, and hence it might soften a bit.
So thank you very much for coming to question number 8, which is, well, if there are not enough vessels in the market and there is demand, whether it's muted or not, or whether it's suspended or not, why aren't there any new builds? Would you like to start with that? Money seems to be available for acquisitions, money seems to be available for buying ready assets, fleets, but no money seems to be available for new builds, or a customer is not willing, or charterers, owners not willing to new build.
Look, I can give you an answer of it from Monday, 2 days ago. I looked into a new build and I got a new build offered, PSV, at the price where I looked at it and said crazy. and these are supposed to be competitive prices. And I look into the market and say, is there anybody who is willing to sell a PSV where I have a better return on my dollar? So that was the discussion on Monday that I had with a shipyard. And I said, for me, today it doesn't make sense. As long as I have money and I find a willing seller with a decent asset, there's no big incentive for us to build. This will definitely change when the market has rebalanced, I believe. That's number one. Number two, the risk of return. We're all saying we can foresee maybe 3 years. We're bullish maybe about 5, maybe a little bit longer, but none of these vessels pay you back in that period when you new build. Hence, no IOC today, or there are a few IOCs starting to give you a long-term incentive to look into that. But it's purely for me a return, reward, bang on the dollar, depending how you look at it, as long as I can find something. Sooner or later, I will have a fleet which is old enough where I need to rebuild, but we're not at that point.
Captain, look, you've got a bunch of vessels that are operating in the Middle East. Do you feel the same? Or?
So good thing, Friedrich is saying, a willing seller. He's not looking to the left, Give me the right dollar, I'm there for you, So anyway, it doesn't make sense. You go for a
Kevin, do we make commissions on these deals?
Yeah. 0.5% to Marine Money, 0.5% to you.
Done.
Okay, it doesn't make sense to new build. You go for a new build for $34 million, 32, 34, something like that. Today market, you are getting, suppose, $30,000 a day, pay about 24, 25,000. For a 3-year contract, you are making $25 million net into your pocket, correct? Why somebody will take a risk to build a vessel, delivery after 3 years, rather he pays money today and make $25 million in next 3 years?
But if it's not available, if the demand is so high, there's no supply.
Everything is available at the right price. You want to pay the price, somebody will sell, It's not happening, Mathematics is simple, How much money you are willing to pay. So mathematics, everybody is using same calculator, correct? 2 plus 2 is equal to 4.
But the resale value today is still below the new building price. If that inverts, then there's a different incentive.
No, but I tell you, 10-year-old, 1,000 square meter PSV will fetch you in a range of 28, 30. I have seen vessels, 10-year-old, 1,000 square meter asking, one guy asking 35.5, somebody asking 30.5. So I thought, let me do in middle 32, That still makes sense. So I think, nobody is going to do a new building on a speculation because nobody has the view 3 year for new building, then 12, 13 year to do the break even. Who is going to have a so long-term view on PSVs? Or anchor handler as well, both.
George, you see money being available in case someone is bold enough?
No, money can be available, but I think we're not asking also another question related to that. Are there yards there that are willing or able in numbers? I mean, not 1 or 2 or 3. You can, right? Build this type of vessels, right? The answer is no. You have almost half the capacity. Even if every yard would want to build OSV, and I'll go to that in a minute, it's 50% of the yards that can build OSVs compared to the previous 2013, 2014 time. So 50% less capacity to build. Yards have their hands full in conventional shipping, right? Because this is where they make significantly more money in building vessels compared to offshore. So yes, so they either don't want to build offshore or they give stupid prices, as the gentleman say, to build. Otherwise, it doesn't make sense. What this is going to keep on doing is going to keep supporting a second-hand market, which, compared to where the charters is very low priced, actually, compared to where today.
Okay, I think we have just about a minute left, and I'd like to end this on a sort of a positive note. I'm going to ask Mark to give some closing comments on specifically something that we discussed yesterday about some of the incentives that some of the national regional oil companies are giving to take care of this issue of new builds. Could you please elaborate?
Yeah, thank Thanks. We had it over a drink yesterday, so my memory is a bit dodgy.
This is only after the second one.
Fine. I mean, so what we have seen is a couple of things, and I'll try to make it very quick, but it's really relevant to our industry. So with major oil and gas clients, especially international ones, huge, they are really looking into extending the life of a vessel by using the condition assessment programs available in class to even extend the assets for 25 to even 30 years. So that's already in serious discussions by major oil and gas international players. So that, that is something really important. And from others, their out-of-the-box thinking is, there is standards for 10 years, and we have even seen yesterday, a couple of days back, clarification that the oil major is willing to invest to provide you the finance for the new build, for example, 2 vessels, right? So the oil major is willing to advance that payment interest-free for a period of of the charter, and then the principal amount will be deducted throughout the life of the vessel. This is one of, I think it's not gonna, but this is something that
But this is a tender that's out there. It is being clarified by an oil major.
Yeah.
So it's a real direction, even if it doesn't transact.
It's gonna happen. So what I mean, if others would follow, I doubt it. But but this is something. For example, talking about Saudi, recently on new builds, Aramco recently clarified that they would be open to the idea, and they requested all the bidders to provide options to build in Saudi in IMI. So I think, and you look at Total Energies investing in a drilling rig. Also that is something out of the box. So it looks like there is a lot of activities, a lot of out of the box thinking at the moment, but I don't think it's gonna solve. I think a friend of mine said every single OSV vessel in water now is gold. So you better make sure you keep those assets in good shape for a few years to come. Thank you.
Well, thank you very much. I think we're out of time. I'd like to join me in thanking the panelists for the very incisive comments. Thank you.
Thank you.